All right, this is year-end 2024 for Medical Properties Trust. What you're looking at right now is a chart of the short interest over time, going back to 2020. This is from marketbeat.com. So for whatever that source is worth, this is what we have. Makes sense to me. Back in 2020, this was a high-flying stock doing really well, and so short interest was very low. And as we can see, there was a ramp up here, beginning really back in 2021, and it got to its height in roughly first quarter 2023. And then we see a decline and then a ramp back up here in third quarter 2024. I have a feeling that this second peak right here may be what we can call a short trap, right? They have bull traps and bear traps, because you see it's a slow, organic, natural ramp up, and then you see this decline here. And I mean, I had no idea the short interest got this low first quarter 2024 before slowly increasing again. And again, this is because shorts are saying, oh, this thing is the short is currently cheap again, so let's jump back into it. And as you can see, the 148 versus the 144, very close, something like a double top. And so the only thing that I'll say that worries me a little bit is that the second top is higher than the first top. And when you see something like that, that means usually higher lows and higher highs, meaning that the short interest is going to continue to go up higher. But we see it's coming down now. And so going to be really interested to see how this thing plays out. If the short interest gets back to this very current low of 500 million shares short, we can definitely see it can continue to come down. Whether or not it gets all the way back down here in the historic lows of 20 and 2021, I don't know. But once it gets close to that $500 million range, it'll be very interesting to see what happens, whether or not the shorts pile back into it or if it continues to come down. All right. So the reason for this video is because we just got the year-end 2024 results, and I was very interested to see what was going to happen with um, the impairment. And unfortunately, the impairment stayed high. And so, this becomes wait and see again, right? And so we have first quarter 2025, second quarter 2025 to see if that impairment number starts to come way down. If it does, I think we can see some earnings beats. As of now, there was a revenue beat, which is the reason for the most recent rise stock price, share price rather. I wanted to quickly talk about a few things that I did in this analysis. Number one, as always, I never use the accumulated depreciation and amortization in my analyses. The other thing that's important to note here is that in the 8K, right, which is not the official audited version of the 2024 results, they don't spell out how much the land is versus the intangible lease assets are when calculating the property. We can see back here for 2023, these are the audited results, and you can see they broke out the land, the buildings, and then these intangible lease assets. So I don't know what those intangible lease assets are. Matter of fact, I did do a search. Let me see really quickly live here. See if I can find them somewhere in the results. Yeah, there's only two matches, and yeah. So again, that number will be available in the audited uh, financials. Usually coming out sometime in, I don't know, maybe uh, later March, April. But anyway, so that's one thing. So what I did was I kind of just guesstimated at what those intangible lease assets are going to be. And what they are is literally when someone signs a lease for the hospital that Medical Properties Trust owns, the value of that lease for however many number of years the lease is for, Medical Properties Trust books the value of that lease for however many years onto their assets, right? But as we can have seen before, if the hospital operator doesn't pay rent, or if they file bankruptcy or something like that, all of a sudden those intangible lease assets turn to zeros, right? And so I don't like to include those, and so I've taken them out in all the other years, and then for 2024, I was left to just guesstimate as to what that is. All right, so before we do that, wanted to show what I thought was some good news, but also some bad news on this thing. So going back again, the impairment number is down here, real estate and impairment charges. And like I said, this is the highest it has been. This was the number last year, which is fairly modest, but it's jumped all the way to 1.8 in 2024. And so looking for this number to come way down, which is going to have a drastic effect on the net income. You can see it here. So the net income was a loss of 500,000. And if you take the impairment, which is not a real cash expense, right? If you take that number off, then you only have a loss of 150, right? And then if you add back depreciation, all of a sudden you're positive for the year. Same thing in 2024. If you take off the if you take off the impairment and the depreciation, again, you get back to positive profit. And while I don't include those items in my analysis, others do. And so when they post the public numbers, it shows a profit loss versus the gain. And I think that may have some bearing on the share price as well, or at least the uh, the share price going up or down based on how people are seeing the company. All right, see here. The other thing that the other thing that I thought was really interesting were the investments. Okay, now on average, those investments have increased by 24% every year. And that's going to be different equity positions in companies that they are doing business with. So what they'll do is they'll buy a property from a hospital, and sometimes what they'll say is they'll say, okay, well, we're going to buy this hospital from you. We're going to give you cash, but in exchange, you're going to give us a piece of the business, right? And so that's what a lot of these investments are. There's also investments in other companies where they partner with them to do construction deals and stuff like that. That kind of stuff has not been happening much over the last year or two, but they do still have money coming in from those investments. You can kind of see what they have been over the years. See a big jump here between 20 and 21, but it's been really just a slow increase and then a huge drop off between 23 and 24. So I think that drop off continues to happen, and so that's why I have it predicted for 2025 numbers right around 80 or less than half of what it is right now. Receivables, I think those can come up. Cash, I don't know. They're definitely going to be selling some stuff, but who knows where cash is going to be. The for sale stuff, they are still looking to sell some properties, but I don't know again where that number is going to fall. So I have it just flat basically whatever it was from last year. Um, Overall, on average, the number has increased over the last 3 or 4 years. So it's possible that it'll be a bit bigger, but again, it's hard to say. The number of loans, again, this has everything to do with the companies that they do business with. If they buy a hospital from someone, they may also issue a loan to that operator to continue their operations. This is also part of the, I don't know, quote unquote conspiracy theories that people have for this company, financial engineering and such. This company does do financial engineering. That's their business. That's what they do, right? And part of that is basically being a bank for these hospitals. Now, whether or not that's ethical, whether or not that's legal, so far so good, right? So if they buy a hospital from a company, they may issue a loan to that hospital operator, and that hospital operator will, of course, use their money to then pay rent back to the medical properties trust. That in itself is illegal, right? However, if you're offering this loan to the hospital operator for some other reason, maybe it's for, I don't know, equipment or something like that, and all of a sudden it's fine. So it's a weird thing, but again, that's what this company does, right? And so, overall, that number has decreased. I think it's probably going to come down even further. You can see again, this is between 2023 and 2024. It's almost half, right? More than half actually. And so I have it coming down slightly, but not much more. What else I think is important here? Um, Talked about the debt. Um, Debt is something that they have talked about on all the earnings calls. They're wanting to bring it down. As you can see, they've done a fairly decent job at that. Between 23 and 2024, it's come down almost 12%. And so I do have that decreasing slightly, but not a huge amount. Um, and so that brings us to the net balance, which I think is important here. Okay, so 2025 predicted numbers, I have 5593 for the net assets minus liabilities. Currently, right now in 2024, the number is 554. And so that means that I have a slight increase in the balance sheet, which I think will be a really, really good sign for this company. You can see, however, over the last years, that balance has really decreased. I mean, it is just, except for in their growth stage between 2020 and 2021. But I think that it's part of the story of the company, which is in 2020, 2021, again, high flying stock. They're adding a lot of properties, and that's why the balance sheet was increasing. And now they're kind of consolidating what they have. Some of the operators ran into some problems, but also you have high interest rates, right? And so when interest rates were low, this company was able to go out and get loans at really cheap rates and then use that money to buy the properties and then rent out to their operators. When interest rates are higher, that business process flips, right? So now you cannot go out and get loans to buy properties. And now what you'll do is you'll try to sell those properties, right? Again, that's what this company does. And when they're selling these properties, that reduces the balance sheet. So if you look back in 2020, you see their balance sheet was 5763. In 2024 is 55, right? So again, it's about the same. It has reduced. I'm showing it slightly increased here. We can play with some numbers, maybe on the debt not coming down as much, or maybe the properties coming down some to get this number lower to kind of keep it in line with what we've seen over the last couple of years. But the numbers say on average, this thing has increased 1% a year. So we'll kind of leave it there. All right. That gives us a book share of $9.32. That has been the case for the last couple of years, which is why I've consistently said this stock is undervalued, if not fairly valued. So 2024, this is the lowest that the price has been, and that gave us a price to book of 32 cents, which is super, super cheap. I haven't looked at their peers to see where they are, but I mean, that's just super cheap. And it never got to a price to book of one. And what that simply means is that the share price is worth what the book price says. And that is what's going on with this company. The shorts are saying that this company is not worth what they say they're worth on their books. A lot of people point to the fact that when they purchase these properties, they're overpaying for them, right? Um, and that may be the case. That may be the case. Like I said before, we only have the numbers to go on. That's all we have. What's being reported. I have thought about doing some research and trying to figure out what the actual cost and price for these hospitals are. That's going to be difficult because remember they have properties all over the world, so Spain, Colombia, Australia, I think still. So it's going to be difficult, but it may be fun to do. Trying to figure out what the actual price of those properties are, and then looking to see what the differences are on the balance sheet. Going back to 2020, 2021, 2022, we see that the price to book has gotten as high as almost two, right? And so while it's hard to see the price to book getting back to one in 2025, um, I do have, let me see. Yeah, no, I still have it at, I believe this is 81 cents. Okay. So slightly higher than the 2024 number, which I think is very valid. And that gives us a price of $7.65. On the very low end, remember, this is based on the lowest price from 2024, but based on the net balance sheet number here. I have $2.95. Seriously doubt it gets down that far. Um, but again, we'll have to wait and see what happens in the first and second quarter of 2025. That's definitely going, I think, to be a pivotal moment for this company. All right. The other thing, the share count. I don't think the share count is going to move at all. As you can see, over the years, it's been really steady, except for in 2020 when the share price was really high. They were selling shares or issuing shares rather in order to get cash to buy some of these properties. And since then, the share count has stayed very, very flat. The small increases that you see here are less than 1%. And it's primarily due to paying employees and stuff like that in shares. Overall, though, numbers say 3%. I just left it flat. Okay. And so the other thing I did, this is the profit loss statement. This company does not trade based on the profit loss. But I do the numbers anyway. As you can see, they're way out of whack. $10.90 the lowest, 15.15 is the highest. That's not going to happen. But what is interesting, what I did was I took the rent revenue as well as the sales revenue. Okay, so selling properties, but also the money that they get from rent. Okay, and I took that number and I divided it by the net balance sheet number. Okay, and so that's what you're seeing here. So predicted value for 2025 is 30%. So 30% of revenue and sales is the total asset balance sheet. Okay, and the lower that we make those assets, so if we value the assets lower than what they're reported to be, this number is going to increase. It then makes rent revenue 50% or 60% of total asset value. Okay. All right. So looking at 2024, this is the current number, 26%, 9% in 2023, very, very low, but also this coincides with what we saw um, here in the short interest, right? This is 2023, February 15, 2023. We see the short interest really, really high, right? 9%. 2022, 25, 21, 19, 2020, 19. Okay, so flat these first 2 years when they were really high flying, and then 25%. I think because you know this is kind of culminating in their best performance over those years, and then a huge drop off in 2023, and then an increase in 2024. But like I said, predicted numbers for 2025 show another increase, and so that means that there is going to be some upside here as far as the rents and the sales go. So, in closing, it is possible, statistically possible, that this stock gets back to a price to book of one. Okay, just because it has been 2023, 2022, 2021, 2020, right? Price to book of at least one as a high. And that if it gets back to that, that means that this company has dispelled all myths that the asset prices are not what they I'm sorry, that the asset prices are in fact what they have reported them to be. I don't know if the CEO is taking. Well, I know he's taking this stuff personally. I know he is, but I don't know if he's allowing it to really fuel. Um, I don't know if he's going to expend much energy on going after this stuff. Right. So far, he has not. I mean, he fought back against the short interest company that put out the hit pieces on Medco Properties Trust. Didn't win, but settled with them. And he has consistently said that our business practices are just and that we're valuing things properly. That's what he says. So I don't know if he's going to go out of his way to try to prove that. So I don't know if and when this share price ever gets back to a price to book of one. But if it gets back to at least the historical high of 2024 and 2023, then we can see a share price of $7.65, which I'll be happy with that. Anything above $7.65, I will definitely want to come in, do another analysis to determine whether or not this is something that we're going to stay in. And maybe even between now and then, I'll have a chance to really dig in and see what those asset prices really are. The minimum of $2.95, I think the worst of the worst has to happen. The other thing that I saw here, which was really confounded me, right? So these numbers that I'm pulling, again, they're statistical possibilities, okay? And these are based on standard deviation and then a simple average, right? The standard deviation says that the net balance sheet can get all the way down to 3.5, which is a huge drop, but not a huge drop when you consider the big drop between 2023 and 2024, right? But man, if it gets down to that 3.5, that gives us a price to book of 0.11. And that gives us a price of like $1 for the stock. And I think that is the short thesis on this thing, right? I mean, this is the scenario in which I think if you're short this company, this is the scenario that you're looking at, right? You're looking at cash coming down. Get rid of these. Yeah, you're looking at cash coming down, receivables, and this is comparing to the current 2024 numbers, right? So receivables coming down, which I can see that if you're getting rid of properties, right? Um, the for sale, you'll have to lose money on selling a property. That has not happened. Um, every time that they have sales, or I'm sorry, no, no, no. What do I mean by this? Every time they have something for sale, it's always a positive. So let's change that to a zero because that'll never happen. All right. Um, loans getting chopped in half. Um, hard to believe. That'll have to be a revaluing. Properties coming down. I can see that. Investments coming way down. I can see that. Um, leases being down, I could see that as well. Again, that's if you're getting rid of properties. Um, and then the rest of this stuff is debt still coming down, maintenance still coming down, deferred income and payables coming way down. Um, but that still gets us to a price to book of 0.11. And that's crazy. Wait a minute. No, this is B20. Okay. Okay. The price to book and versus the standard deviation. Okay, the current price to book minus the standard deviation. Okay. So again, a statistical possibility, but man, hard to believe. But that gives us a share price of $1. And again, if you're short this company, that is the thesis that you have to have yeah, if that's going to happen. And I don't. It's hard to see that. It's really hard to see that. But I also don't see a price to book of getting back to one either. Not in 2025 anyway. So anyway, that's it. Again, I'm not even consider the $2.95. Um, I'll say I'll say that technically speaking, like technicals, maybe the company gets back to like $4 or something. I think it's found support every time at right about $4. Um, and and yeah, in a high of $7.65. After that, we're going into uncharted territory. All right, from me to you, holla.